Hey guys, so what we saw during the last couple of months was a pretty strong correlation between all major asset classes. For example, when we just look at the last about 3 months, starting in early October 23, we saw a rise in here the inverted dollar index, as well as Euro US dollar, German, as well as US 10-year or every duration government bonds, the stock indexes, and gold. So if we dig a little bit deeper into how this rise happened, we see that it started in the currency market, in the FX market. And we could assume now that the market that was first to react, that was the fastest to react, will be the fastest to react on the downside as well. This bounce back, it has been long overdue. It could have happened already before the last Fed meeting on December 13th here. But you know what happened? Powell made this pivot, and so he propelled this market even higher. Now to judge whether the market has already topped, I will take a closer look at the dollar index. Let's re-invert it. You might count this as an impulse. You could. But the funny thing is, it turned around just here at this 100.6 level. And that's an old level where we saw a bounce before, a false break, and now we went back to this once broken and rebroken level. So the standard scenario would now be in a bigger perspective that we saw this move down, here a correction, and now another move down, and this would be one of the first waves of this move down. So we might see a correction somewhere here, down again, another correction, and down again. But as long as this support stays intact, there is also a possible alternative alive, and that would be that this correction is not yet over, and we could correct even higher than this October level. So it could even go until here or even a bit higher. That would be a nasty thing for the stock market. So right now we have to differentiate between two different scenarios. This, let's call it re-election scenario. I don't know why Powell made this pivot. The thing is just it was such a rapid change. So it made me wonder. But whatever the reason was, maybe it was just to save the Christmas shopping season, or had to do with the elections in 24 November, whatsoever. But that would be this, let's call it Goldilocks scenario. US dollar index further down and stock market further up, but this thing here, and we will see it in a moment when we look at the microstructure. This thing here makes me think that the alternative might take place, and let's call it the plunge in the stock market. And yeah, so when we compare this move up with this move down in the Dow Jones, that was the plunge from summer onto autumn. That might repeat if the nasty scenario takes place. So I'm not sure which versions the Goldilocks or the plunge will take place, but just an idea. So we made this extreme move until exactly this old important level, and what we've seen since Thursday could have been already a first impulse up, and the correction might already be in, but it could as well take a few more hours until maybe Tuesday, Wednesday, Thursday. And so the good thing about these two different versions is that in the short term they both lead us in the same direction. That is, down in the stock market and down euro, US dollar, up dollar index, down the bonds. If it's just a correction, we will see something like the 104, 105, 106 area. If it's a bigger move, we will see the 110 plus area. And in both versions, we'll see a move up next, so that's easy to trade. Yeah, but remember, this is just my personal trading diary, and no trading advice, no investing advice. So yeah, have a nice 2024.